Imagine this. Suddenly your car breaks down. Bam! $800 gone. You're stuck eating instant noodles for a month, and you've got no plan for your cash. I've been there, and it's not fun. Now flip that. Picture having an emergency fund ready. So when that bill hits, you're like, no sweat, I've got this. That's peace of mind. Or think about the bigger stuff. Maybe you want to take a dream trip, like I've always wanted to hike in New Zealand or even buy a house someday. Without a grip on your finances, those dreams stay out of reach. But with a little know-how, you're saving up, watching your money grow, and suddenly that plane ticket doesn't feel so impossible. That's what personal finance does. It turns someday into let's make it happen. This is why personal finance matters. Life is busy, no doubt about it. But here's the thing. Money is more than just numbers. It's a powerful tool. It's not about chasing wealth or penny pinching. It's about learning to make your money work for you. When you master the fundamentals of personal finance, you're not merely surviving. You're shaping a future that brings you joy and fulfillment. All right, buckle up, folks. We're diving into the wild world of budgeting. I know, it sounds about as exciting as watching paint dry in slow motion. But trust me, it's your money's GPS. And without it, you're basically that guy driving in circles, chugging gas, yelling, I'll find the highway eventually. A budget's here to save your bacon, showing you where your precious dollars are sprinting off to. My secret weapon? The 50, 30, and 20 rule. It's so easy. Even your goldfish could figure it out. Imagine you're raking in $2,000 a month. That's $1,000 for the boring but gotta have it stuff. Rent, groceries, gotta eat, and Wi-Fi. Because life without cat videos is no life at all. Then $600 for the fun zone. Think Netflix marathons, that pizza night where you pretend you're a ninja with the last slice. Or maybe a new pair of socks with funky flamingos on them. And the last $400? That's your VIP pass. Shove it into savings or yeet that credit card debt into next week. I started tracking my cash last year, and holy guacamole, was it a circus? Turns out I was tossing $50 a month at random snacks. Yep, I was the sucker buying overpriced chips and whispering sweet nothings to vending machine Twix bars. Now I've kicked that habit to the curb and rerouted those bucks to my savings, where they're chilling like little green VIPs waiting for a big debut. You don't need to be a tech genius either. Just snag an app like Mint or go full caveman and scribble on a napkin with a crayon. Trust me, once you spot those money leaks, like that $5 latte you swear you deserve, you'll plug him faster than you can say broke no more. You'll be laughing all the way to the bank, or at least to the pizza joint. Next up, the emergency fund, your financial superhero cape, ready to swoop in and save the day. Life's a sneaky little gremlin, throwing curveballs like my cat who decided a sock was a gourmet snack and slapped me with a $300 vet bill faster than you can say, hairball. Without that cash cushion, I'd have been toast, burnt, crumbly, and begging for mercy. The goal? Sock away 3 to 6 months of expenses. Say your basics are $1,000 a month. That's $3,000 to $6,000 sitting pretty, waiting for disaster to strike. Don't panic if that sounds like a mountain of moolah. Start small, you penny-pinching genius. Toss $20 a week in there, and boom, it piles up like laundry you swore you'd fold. Park it in a savings account. Slap a big, do not touch or else, label on it, and sleep like a baby knowing you're armed for the chaos. True story. My pal Sarah, bless her forward-thinking soul, stashed $1,000 in her emergency fund like a boss. Good thing, too, her laptop croaked right in the middle of a freelance gig, and instead of crying into her ramen, she whipped out that cash and saved the day. Crisis averted, deadlines met, and no one had to sell their soul to the Wi-Fi gods. That's the power of the emergency fund. Folks, your personal safety net for when life decides to play dodgeball with your wallet. Now, let's wrangle Dit, that sneaky, fire-breathing dragon lurking in your wallet, just waiting to roast your finances. Not all Dit's a villain in a cheesy cape. Grabbing a mortgage to snag a house can be a slick move, but credit card debt at 20% interest? That's a full-on, scales and claws monster chomping through your cash. Picture this. You owe $2,000 on a card. Think you can just toss the minimum payment at it and call it a day? Huh. You're stuck in that dungeon for years, bleeding interest like it's a medieval torture flick. I went full knight in shining armor with the avalanche method, swinging my sword at the highest interest at first. Had a $500 store card at a ridiculous 25% breathing down my neck, blasted that sucker into oblivion in 6 months flat and strutted out feeling like a champ. Or, if you're more of a small victories warrior, try the snowball method. Smash a puny $200 bill first, flex your muscles, and ride that high to the next battle. Either way, grab your weapon of choice, be it spreadsheets, sheer willpower, or a battle cry, and slay that beast before it builds a lair in your bank account. Saving and investing. Grow your money. Once you're steady, it's time to grow your wealth. Think of it like planting a money tree. Saving is great, but inflation is the sneaky thief that makes your money worth less over time. Imagine you stash $1,000 in a jar, fast forward 10 years, and that same money buys fewer groceries, fewer concert tickets, and definitely less coffee. Investing helps fight that loss. I started with just $100 in a low-cost index fund. Boring name, but big results. It's like hiring time and compound interest as your personal gardeners, constantly working to grow your money. My cousin took a different route, setting aside $50 a month into a robo-advisor. 5 years later, his small, steady investments have turned into a solid down payment for his first home. The best part? You don't need to be a stock market expert or have a fortune to start. Small, consistent contributions add up, and the earlier you begin, the bigger the impact. Start small, stay consistent, and dream big. Your future self will thank you. Credit score, your financial report card. Finally, your credit score. It's basically your money GPA. A strong score unlocks better loan rates, lower insurance premiums, and even easier apartment approvals. A bad one. You'll pay extra for just about everything. Picture this. My buddy Jake missed his phone bill 3 times. His credit score took a hit, and when he applied for a car loan, his interest rate shot up by 2%. That's real money lost. Avoid the pain with a few simple rules. Pay your bills on time. Keep your credit usage low, ideally under 30% of your limit. So, no more than $300 on a $1,000 card. And don't open unnecessary accounts just for perks. I check my score for free with Credit Karma. It's like a sneak peek at your financial swagger. A little attention to your credit now can save you thousands down the road. So, you've got the basics, now let's turn that knowledge into action. Mastering your money doesn't mean flipping your life upside down overnight. It's about small, powerful steps that stack up like bricks in a fortress of financial awesomeness. Here are 4. Yep, I snuck in an extra one. Quick wins you can start today to take the wheel. Let's dive in. Automate your savings, set it and forget it. First, let's make saving as easy as breathing. Set up an auto transfer to your savings account every payday. It's like a ninja quietly building your stash. Picture this. I set $25 to zip from my checking to savings every Friday. By month's end, I had $100 without even noticing. My friend Mia took it up a notch. She auto-saves $50 a paycheck for her Europe trip fund. 6 months later, she's got $600 and a countdown to croissants in Paris. Pick an amount, even $10, and watch it grow like magic. Trim one tiny expense, redirect the loot. Next, play detective with your spending, find one little luxury to cut and redirect it to your goals. Last week, I skipped my $5 latte run. made coffee at home instead, and tossed that cash into my emergency fund. It's not about deprivation, it's about swapping meh for yes. My brother ditched his $12 monthly streaming app he barely used. $144 a year now sits in his investment account, quietly growing. Scan your last week's expenses. What's your $5 sneak? Cut it, redirect it, and feel the power shift. Map your money, 10 minutes to clarity. Third, grab a pen or your phone and spend 10 minutes tonight mapping your money flow. Write down what comes in and what goes out. It's like shining a spotlight on a dark room. I did this once and realized I was blowing $80 a month on random takeout. Oof. A viewer told me they tried it and found $30 a week vanishing on impulse buys. Now they're saving it instead. Awareness is your superpower. 10 minutes can rewrite your financial story. Celebrate a mini win. Build the momentum. Last one. Give yourself a high five for a small victory. Paid a bill early? Saved your first $20? Celebrate it. When I paid off a $150 credit card balance, I treated myself to a $2 ice cream cone. Small, but it felt like a parade. My cousin celebrated saving $100 by blasting her favorite song and dancing in her kitchen. These wins fuel you to keep going. So pick one thing, any little triumph, and pat yourself on the back. You're on the move now.